Um dos arrependimentos que eu tive foi justamente no meu começo de carreira não ter tido acesso a bons empreendedores e bons mentores que pudessem ter evitado que eu escorregasse em algumas cascas de banana. E foi justamente pensando nesse conceito que nós estamos lançando o nosso Zero ao Topo Experience, um evento de mentoria onde eu, junto com outros empreendedores super experientes, estaremos ajudando pequenos e médios empreendedores a cada vez mais escalarem seus negócios. O Brasil é um dos países mais empreendedores do mundo, mais ou menos 80% dos brasileiros pensam em empreender. Justamente esse nosso esforço aqui é para fortalecer essa parte importante do nosso país, que nós acreditamos que quanto mais empreendedores competentes nós tivermos no Brasil, mais emprego, mais renda, mais inovação nós teremos em nosso Brasil. Então todos estão convidados, espero que vocês aproveitem e nos vemos lá.
Show me the money.
Seguindo a toada de conteúdos diferentes e quebrando o protocolo do Stock Pickers, este conteúdo, o episódio dessa semana, será um painel também gravado na Conferência Institucional da XP, na sua quarta edição, que, na minha opinião, foi a melhor até aqui em termos de conteúdo. E esse painel foi o painel de encerramento, onde nós tivemos um debate extremamente profundo e interessante, que fugiu completamente do comum. Primeiro, o mediador Ricardo Jeromel. Para quem não conhece ele já foi analista de tecnologia da 3G Radar e é o autor do best-seller O Poder da China, uma das pessoas que mais entende sobre a geografia e que fez a mediação do painel. E com ele, nós tivemos Ron Cao, que é fundador da Sky9 Capital, Ning Kang, que é diretor executivo da IDG Capital, e Aileen Chang, que é fundadora e CIO da Tashi Capital Management. Ron e Ning são gestores de 2 venture capitals, que são aqueles fundos que assinam um primeiro cheque e investem nas companhias nos estágios mais iniciais delas. Eles investiram em Alibaba, Tencent, Baidu, quando estavam no começo da sua trajetória. Um deles é gestor do maior venture capital da China e o outro do mais bem-sucedido da Ásia. E a Aileen é gestora de um fundo de public equities, ou seja, está para um gestor de ações aqui do Brasil, também com essa perspectiva de investir mais em tecnologia. E o debate foi justamente sobre inteligência artificial, tecnologia como um todo, e em que estágio a China realmente está frente aos pares, principalmente Estados Unidos, com várias mensagens muito fortes nesse painel e com uma mediação brilhante do Ricardo Jeromel, que conseguiu extrair realmente com profundidade os pontos onde a China deve vencer ou avançar na perspectiva desses 3 gestores que olham para essas empresas no detalhe em vários estágios de suas vidas. Então, não pode perder, porque inclusive esse painel fez muito barulho no mercado, vários gestores pediram para mim o conteúdo, e agora eu disponibilizo não só para esses meus amigos que fazem gestão de fundo aqui no Brasil, como também para qualquer investidor que quiser acessar aqui no Stock Pickers.
Bom, meu nome é Ricardo Jeromel, eu escrevi um livro, O Poder da China, e queria perguntar para vocês, levanta a mão aí, quem já foi à China? Não dá para contar quantas pessoas, não dá nem 10. E levanta a mão aí quem já foi aos Estados Unidos. Então, olha só. Então, acho que os Estados Unidos deixou de ser o maior parceiro comercial do Brasil em 2009, se tornou a China, e nos últimos 4 anos, a cada ano, a gente bate recorde de volume de negócio entre Brasil e China, e temos completa ignorância. Então, aqui nós temos investidor dos Estados Unidos, da China, da Coreia, tentando trazer para vocês o melhor do mundo, o melhor do futuro. So, without any further ado, now we're going to speak in English. And a very brief introduction. My friend Ron, we met some 6 years ago in Shanghai. He used to be a partner at Lightspeed. Lightspeed is an iconic venture capital fund from the US. He launched it in China. And then he did his own fund, Sky9 Capital. He has invested in companies like Meituan, maybe you heard, coming to Brazil, the world's largest food delivery platform. ByteDance, that owns TikTok. Pinduoduo, that owns Temu, and from inception to being listed in the US, worth over $200 billion. So, Ron, the question that everybody will want to know is, well, what's going on in AI, man? I I wanted to tell them about some of your portfolio companies in AI and what should they know about AI? What do you believe is happening and not happening in that space?
Well, first of all, thank you very much for having me here. It's, in fact, my first time here, 3 days, and learning a lot about the market and the entrepreneurs here. So I was quite impressed with the work ethic and the global mindedness of the people here. So love to do more things here. We've been investing in AI for the last 5 years or so. You know, I don't know how much it's discussed here, but it's constantly discussed in China. I think the other place will be Silicon Valley. I think ultimately it will be a race of Chinese companies and U.S. companies. We're an investor with a large language model company called Moonshot AI. They launched a product recently called Kimi K2. If you follow the space, you'll see a lot of buzz around that because it's the most powerful model. I think that DeepSeek took the place as the best model in China, and now it's not news anymore. But the models get better. This one, it's the best model for writing code, better than most of all the U.S. models. And two, it's the best for agentic functions. So if you want to take action, it's the best for that. You know, putting together research, putting together itineraries, do certain things for you. It's best for that. And it's also open sourced. I think people may underestimate how powerful that is. It is completely free. You can use it for your firm. In fact, we use it in a venture firm where we done some reference calls and we pull the notes into this model, and it tells me the references were not very good, even though we thought it was a reasonable reference. Because sometimes people sugarcoat the message, but the AI picks that up, says that's sugarcoating. It's actually very bad reference. So I think the China is definitely in the eye of the storm, development on models. Going forward, I think the model companies in China and U.S. are pretty much set. There's about half a dozen both countries. U.S. is more, consumer closed systems. China is open source, global. I think people who can take advantage of that, whether it's here or India, anywhere else, can really excel. I think the opportunity right now we're focused on is really applications, just tremendous applications that can be built. And Chinese entrepreneurs are very much at the center of that.
This is fantastic. So Moonshot AI, take a look, make a note. And he said it will be China or the US that will win the AI race. So Ning, brief introduction. Ning is a partner at IDG Capital. IDG started in 1993. They have made over 1,700 investments, more than 600 exits. They have invested in some of the largest companies that you are going to know, like Shein. Maybe you shop in Shein. Also ByteDance. A lot of the electrical vehicle cars brands that you're going to see here in Brazil, I bet. So, Ning, what is your take on AI? What should they know?
Yeah, thank you, Ricardo. Like Ron said, AI is very big in China at this moment. Our belief in this area is, first of all, we've been very, very active deploying our capitals, capturing opportunities for the different levels. For us, we think there's 3 levels of the opportunities in AI in China. First is the infrastructure level, data center on the infrastructure side, hardware as well. And the second is the large language model level. Like Ron said, we also invest in a couple of companies, for example, Minimax, who are very, very active and successful in terms of the launching the applications. I think the most exciting thing for us is really the commercializing on the application areas as well. We have been investing in a couple of the application in terms of the commercializing in the different areas. I guess the DeepSeek moment surprised everybody earlier this year, but I think the really reflecting the facts were one, the gap between China and U.S. on this areas was probably not as big as people thought they should be. The second thing is how China company can achieve a very similar level of the language model with a very, very efficient cost. And the three is how fast the model can be used into the areas of the commercializing points. The first, we've been deploying capitals into autonomous driving areas, which actually utilizing the commercialization application of AI very, very significantly. Companies like Pony AI, Horizon Robotics, we've been invested using the very leading L4, which is the driverless applications on the autonomous driving cars, commercializing and putting into the real practice in the different major cities in China. So I was always, kidding with Ricardo saying that if you come to China or come to Beijing, to the second largest airport, you could literally order a driverless car to drive you into the center of the city, which is about 40 to 50 kilometers with no driver at all in the cars. So that's number one. And number two is the AI application on the robotics in terms of the industrialized using in the manufacturing and also the processing of the logistics. In biotech and consumers, they are also fully utilized, and also in the development of SaaS and the software areas. So these are the areas that we've been actively investing and looking at opportunities to share with the audience.
So autonomous driving is a reality. It's happening in China right now. We don't see that in Brazil yet, but expect to see it in the near future. Eileen, you are a value investor. My two friends here are venture capitalists. They invest very early. I was, for almost 5 years, a partner at a value investor firm that only invests in listed companies in Brazil, 3D Radar. So I understand that you say, AI, I don't invest in AI companies, but you're an investor of companies like Tencent. And even the major, more boring companies, AI is going to touch what everyone is doing. So what are you excited about or not? And how do you look at AI in your looking at the listed companies?
First, I am much older than I look, so don't worry, I know what I am talking about. And so for AI, I think AI is real. I use it daily for for our research. I cannot live without various AI tools. And Chinese AI is very meaningful because at the end of the day, when companies and consumers choose AI, it's about product design and cost. And already per token basis, Chinese AI, Chinese models provide at least half the price of American models. And they're very competitive technologically also. But that said, I am a value investor. I stay away from rising technology for my investing. But AI is still part of my investing. For example, like these days in China, any company that I speak to, they mention AI. They mention AI as their competitive edge. But how do I tell if the company is bullshitting or they are actually adopting AI? So one method that I use is I look at companies' data analytics team. And if they are truly embracing AI and if the organization is well run, then their data analytics team size should go down by half at least, because that's what AI allows them to. So for me, I see AI in my investing more for productivity gains and efficiency gains. But there is one company in my portfolio that is directly related to AI. It's a small company that manufactures IoT chips. So IoT, Internet of Things, the internet-connected electronics. I used to think these were gimmicks I mean, there is a washing machine. I can walk over and press the button. Why do I need to connect it to my smartphone and then operate using my smartphone? But with AI, I realized IoT is no longer a gimmick because this washing machine can now be linked to the grid. It can read the electricity price and run the washing machine, do the washing and drying when the price is cheapest. Then it saves me money. It can read if there was a color run from a red shirt and alert me, then I can go and save my clothes. So AI actually made IoT valuable, and that drew my attention to this company. But that's not why I bought this company. I bought this company because it was market leader with 50% market share globally, and it was generating cash and paying dividend, and it was available at its net cash value. So I got the business for free. So being a value investor, we think about AI, but in the end, it's valuation and other factors that drives our decision.
Fantastic. So if you're interested in IoT, there is a fund called Indicator Capital, the largest VC fund focused on IoT in Latin America. Lenovo, which is a Chinese company that sells more computers than any other company, is an investor of this fund. Ning was with the partners this morning. These guys have been very busy doing a roadshow here in Brazil. Let's talk robots since we talk IoT. There are more robots installed in China than in the rest of the world combined. Ning, you have some exciting companies in that space. You want to talk a little bit?
Yeah, well, the data shows more than half of the new installation of the industrial use of the robotics are actually installed in China every year. This is highly related to the manufacturing abilities in China. So this is not built in one day. If you look at the infrastructures of everything supporting the manufacturings in China, there are for example, the 46,000 kilometers of the high-speed train system has been built. We enjoy probably the most cost-efficient and effective logistic networks that support us for the manufacturing. If you come into any of the factories of clean tech, automotives or the power battery factories nowadays in China, it's very, very automated. You see very, very few and human workers there. It's all connected into the internet controlled system that can be utilized in the manufacturing basis with the robotics. And the robotics is not only used in the factories, but it's also used in our daily lives. We've been watching and also investing into the verticals that can change people's life. As I did mention, there's intelligent factors of the consumer electronics. It's all the way from the washing machines to air conditions. It's from the cleaning robots, which can clean the floors and also the house by themselves, all the way to the swimming pool cleaning machines, to the drones, to the sports cameras or the 3D printers. These are all the consumer user robotics applications coming into the life. Robotics can also being utilized in, like Ricardo mentioned, in the EV systems as well. Not only in the autonomous driving, but also in the controlling system and also the application or the accessories to the cars.
Have you mentioned EV electric vehicles? In China, more than 50% of all the cars being sold right now are either electric or hybrid. So here in Brazil, you see a lot of BYDs. In China, there are over 100 car manufacturers. And in fact, in May, I took 20 owners of car dealerships to China. I visited 7 factories. Guys, you have no idea. You are going to have a Chinese car. Remember what I'm saying. Ron, you invest in the EV space. Is there a company you want to highlight?
Yeah, just before that, I think on robots, it's a nice transition to it. We haven't invested in these humanoid robots. I think that's the last frontier, but industrial for sure, that's already happening. Everything's going automated. We just invested in a robot that does there's already robots that sweep the floor in retail outlets. This robot puts things back in the shelves. So anything drops, it'll pick it up, put it back, turn the face of the brand. So that's coming. That's coming. The ultimate robot right now is the car. The car with autonomous driving. And there's so many EV cars in China. Every one is going to go autonomous. That is the ultimate robot. And the experience inside the car is conversational. It's very relaxing. Very much integrated with your phone. We have one company in the EV space, a company called ROX. It's taken the approach to go after the hybrid market. They think most of the world is actually not ready for EV. America is, China is. Hybrid would make more sense for the rest of the world. It's an SUV, fully loaded, very comfortable, looks like a Defender, and sells for about $50,000, selling extremely well in the Middle East and Eastern Europe, where hybrids make a lot of sense.
So imagine a Land Rover for $50,000 hybrid. That is a market in Brazil. What are their sales? If you can share a little bit about their numbers and stuff.
Yeah, I mean, I think I don't know the details of the numbers, but it's the range is a couple hundred kilometers. I mean, you can. It works well in the desert. It's very much tailored towards the sporty. It's really the Land Rover market, the sporty, urban, sort of a male driver. One of the things we're doing is, as we go global, they actually have more sales outside of China than in China. That's a trend that's happening. That's why we're here, and we want to continue to be places like this. These companies are going global. And the first factory is in Beijing. They just opened their second factory in Abu Dhabi, made their first car and start selling there. I think they understand it's important to work with local partners for something like this, distribution, local partners, manufacturing local partners, and they just want to be the technology provider. So we hope to come to Brazil and see a ROX on the road.
Fantastic. So I drove this car, ROX. ROX. Visit is unbelievable. And if the price can be this low, I think it's going to be a big success in Brazil. Eileen, energy transition, big theme, and I know you're an investor of Tencent. Tencent people know. Can you share about your thesis on that front? A quick summary. Why do you own Tencent?
It's a very well-managed company, and it has a very deep moat. I guess we can start there. So there are, for me as a value investor, I try to have a 10-year visibility on the business that I invest. And for Tencent, it's not only it has absolute dominance in people, in people's daily life with WeChat and many programs. So Chinese people basically cannot live without Tencent. And Tencent, within Tencent, in a simple way, let me explain it this way: it's the World Wide Web moved into one app. You don't need World Wide Web. You can do everything that you need within Tencent app, and then it's even more convenient because from payment, everything is linked. So, and it's very difficult to find an app like that. Globally, the company is, the valuation is inexpensive, and if how should I say, even if the form factor moves from a smartphone to smart glasses, I believe the first thing Chinese people would want in their smart glasses would be Tencent app, because that's how they are trained.
So it's like a super app. You all have used WhatsApp today. I guarantee to you, if you use WeChat, like these guys have to use both, WeChat is maybe 1,000 times better. You really do everything without leaving that one app. We don't have anything alike, unfortunately. But that is the first mover advantage. So because all our friends are on WhatsApp, we're not going to be moving. They tried. They hired Neymar, Messi as their face to try to break into the Brazilian market. It didn't work. Okay, Nin, you guys used to own 20% of Tencent back in the day. But as VC, that's how it goes. I really want to hear your take on energy transition because I was living in Beijing in 2011 when I could see the pollution. I could almost feel the pollution. And people would talk about solar, and it made sense for the scientists, but the unit economics made no sense. And then China put so much money into that sector that now more than 85% of all the solar panels come from one country, China. Here in Brazil, more than 90% of our energy comes from clean sources. So when we hear of green hydrogen, we get so excited. Clean tech, you guys have been investing for over 20 years. What are you most excited about on that front?
Yeah, thanks for the question. I think love to talk about that. I think Brazil and China share a lot of things in the utilization of clean tech in terms of the long-term target. Changing from a more resource-driven energy country to a more manufacturing-driven, which is a core strength nowadays of China, is actually a very, very important strategy of the country. Every country will have the different agenda, but solar and the wind is probably going to take 70% of the energies eventually for China. There's a huge opportunities there. The key moment coming to the country was the year of 2019 when the grid parity happened. The solar energy's cost is actually lower than the traditional energies. And then China started to put huge efforts publicly and also privately in these areas. Few things needs to be pointed out is one, China is not only good in the upstream, it's also putting the efforts and build a strong capacity in the full value chain. Taking solar as an example, it's all the way from polysilicon materials to wafers, to panels, to modules, to applications, to energy storage, and all the way down to the batteries and also to the EVs and the associates. So this is the strength is built on the entire value chain and entire industrial chain. We had experienced a couple of years in the past 2 or 3 years with a lot of capacity building up, a lot of competitions. There was a period of very fierce competitions driving a lot of newcomers into this industry. So for us, we have been very, very active. As Ricardo mentioned, we started in 2 decades before learning and also investing. We learned the lessons and we made some successes. But for us, very importantly, nowadays is really looking at the survivors of the consolidations across these different segments in the industry chain. That's number one. Number two is we believe those people who can utilize also evolve into the technology advancement in either solar, batteries, hydrogens, or the EVs will be succeed in the eventually as well. The third thing, very, very important, is because these industries are very manufacturer driven. So for the companies who will be capable to work with countries or the facilities outside of China, we think that is very, very important for the survivors and also for the next generations of the clean tech producers or the manufacturers in China. At the end of the day, China now produce over 80% of the solar, 75% of the power batteries, over 60% of the EVs. They need to work with countries like Brazil. They need to work with the countries outside of China to build up the energy transition dream altogether with other countries and partners.
I think this is such a key topic, energy, and in many ways, AI is an energy play. Next year, data centers alone will consume as much energy as Brazil itself, which is one of the 10 largest economies in the world. Ron, you do a lot in this space. You want to tell the crowd about your GPU company or any other company or your take on energy transition?
Yeah, I mean, I just saw that ByteDance is building a data center here.
ByteDance is the owner of TikTok.
Certainly, China is an energy-hungry place, especially in tech and AI. So a lot of work is done in Southeast Asia in that space. We're not directly investing in energy, but we are investors in a lot of semiconductors, energy-efficient opportunities. I think you mentioned, one of the GPU companies. We're in the leading GPU player in China, called Biren, and so a lot of the sort of geopolitics around the world is actually creating opportunities for investing in China. These opportunities wouldn't have existed if there's less of that geopolitics. Semiconductors, robotics, energy are some areas where attracting a lot of capital as the supply chain there wants to be more domestic and independent. So we track that sector very closely.
Eileen, anything on energy transition? Okay, so I want to ask you, and you can pass to that in solar, there are over 50 companies, and a lot of them have never made any money. So everyone talks about consolidation. In the automotive sector, over 100 brands, everyone talks. A lot of them will fail, and there will be consolidation. Do you have anything to share on that regard, Eileen?
It actually happens in almost any hot industries in China. Once there is a hot industry, banks give financing, and also the interest rate in China is quite low. And all local governments, they want the fancy industry in their province. So all these forces make that intensive competition. In the end, the consolidation has to happen, but when it will happen, I honestly do not know. Because again, the local governments, they're incentivized to keep the jobs. In 2016, China had overcapacity of steel manufacturing and coal mining, and they tried to reduce the overcapacity at the time. And it was possible partly because, temporarily, but it was possible partly because these are traditional industries. There were the rationale that, certain capacity was polluting or using very obsolete technologies. Also at the time, the economy was booming, so the laid-off workforces could be easily observed by other industries. However, today, we are talking about cutting-edge industries, so what rationale will be there to take out the capacity top-down is a question. Also, the economy is suffering, so the people laid out what industry will observe them. This will cause a big question to local provinces. I guess that's not a good answer, but that's the answer.
That's a fantastic answer. So I have been going to China for over 15 years, and let me tell you, no place is more competitive than there. The Chinese founders, they love to go abroad because they hate to compete locally. The norm for tech companies there is to work 996, 9 a.m. to 9 p.m., 6 days a week. It's not one company or another company. It's how it is. These guys have been doing road shows here, and one of Ron's comments was, I was at a tech company last night at around 7. There were people working. This is different from other parts of the world that people do 9 to 5, or in Europe or some parts of the US. So the competition, I would love for you to tell them about the involution term. And also, Ron, if you may, why are you here? It's your first time in Brazil. Why now? What's exciting to you about Brazil?
Well, I have a lot of Brazilian friends that are all very hospitable. So I can't say no forever. And also, it seems very far away. But, actually, it's not that bad. It's one connection. You're here. So I plan to make more visits. But a lot of the companies, I think, the ByteDances of the world, Huawei's of the world, BYDs are here. I would say 5-10 years ago, they were not here. They're mostly trading, it's commodities trading, energy trading. Those are not conducive for venture capital. So when these tech companies are here, I think that's interesting. And now we're seeing startups are looking here. We're looking at the U.S., looking at the Middle East. More because everything, we watch the same. Even though we're on WeChat and WhatsApp, but I feel like we're all on the same media. That Coldplay video that went viral, right? It went viral in America. I think it went viral here, right? It went viral in China. Like we're watching the same video. It's like laughing at the same thing. So everybody's kind of very close together, and I think Chinese companies are very open to work with partners. I think one thing that kind of benefits from sort of the U.S.-China tensions that the Chinese companies realize, okay, well, it's not about us and the world, it's really about us and partners. I think, finding distribution partners, engineering partners, and kind of make money together is sort of the Chinese way of thinking about it. So,
this is a great take. So basically following the money, the companies are coming here now. Brazil's first unicorn was 99. How did it become a unicorn? It was bought by Didi. Didi is like the Uber of China. So what Ron is saying is some of his biggest companies are coming here. And ROX is going to be coming as well, hopefully. Talking about competition, Ning, you guys invest in Luckin Coffee. Now, this is a tremendous story. Starbucks has been in China for over 25 years, and they built 8,000 stores. Luckin, in less than 8 years, built more than 24,000 stores. So, Ning, give a little bit more color on some of this incredible growth. Because for me, when I think China, one of the words that come to mind is speed and scale.
Speed and scale and efficiency, all these things coming together. So we had the luck to work with the Luckin Coffee after the restructure of the company. So this is also related to why we're here in Brazil. Luckin Coffee is a very, very good example. So they bought a lot of coffee beans from Brazil, and they were now actually very local in China. They're the number one coffee chains, like Ricardo mentioned, in China. But what they really can do is they compete with international players and all the other peers. They were able to utilize the efficiency of the China manufacturing 2.0, make the coffee machines can literally produce the coffee using 1/3 of the time, compared with their foreign competitors, use 1/3 of the spaces, and create 3 times of the flows of the coffees. How do they achieve that? The special business model they are using of the grab-and-go model, that people can order a coffee with the applications exactly knowing how many minutes they can get a coffee on the way to the office. They have the small shops, like I said, 1/3 of the areas of their competitors, literally just a huge table with thousands of cups occupied every morning, and people just come and grab it and go. And they can produce 120 SKUs every year. They just go there and try and test. If it's not going to work, just throw it away. And eventually coming up with the blockbuster, the signature drink, they call it coconut latte. It sounds very, very weird, but anyone can try that, will be falling in love with that type of the drink. And back to the question, actually, Ricardo mentioned, we see a lot of companies in the consumer spaces like to work with the people here in Brazil, because this is eventually a very, very big consumer market with a lot of demands of the middle class, consumption upgrades, with the opportunity to work with the best quality products or the services that China companies can provide. We're super excited about the opportunities that are coming in the near future.
So if you're interested in the future of retail, do yourself a favor and research this Luckin Coffee company. I'm obsessed with coffee. 10 years ago, I would carry around Nespresso sachets to make coffee in hot water, because in China, they only drink tea. So here I go to a meeting, everybody in the West offers me coffee. Over there is like, doing tea. I'm like, I want coffee, I don't have. So give me hot water, I would put it. It sucked. So Luckin started to deliver coffee. You would order in the app, and in 10 minutes it will arrive, your warm Starbucks coffee knockout. But one thing that Luckin did that was very impressive was I received so many links to get a cup of coffee for free. So the question that they answer really well is, how do I get my client to bring me more clients? So they would say, hey, if you send this link to somebody and they come to my store, you get a free cup of coffee. So I had so many free cups of coffee. So it's a beautiful story. Eileen, consumer, retail.
So I am a public market late stage investor. Related to the topic that we are discussing, maybe I can add value by explaining why China is suddenly making, kick-ass products, like internet product, online apps or manufacturing. Why do they make kick-ass products? And I think that's why we have this 2.0, when the relationship with Brazil was initially buying raw materials, but now, it's more broad-based. And for internet, for online, it's not about one company, but generally for Chinese online companies, I believe the reason there are so many strong companies is because China is very unique in the world that almost the entire society is mobile native. So what I mean by that, so China, they didn't have, mobile internet was truly revolutionary in China, unlike any other country. Before, Chinese people didn't have PCs at home, and they didn't have daily internet access. And this was not just at home, but many companies didn't have PCs. China was poor at the end of the day. But when mobile internet happened, it worked differently in China. Why? Because China at the time, very luckily, built the manufacturing supply chain. Chinese manufacturers had just reached the level to have a manufacturing know-how to build a smartphone. And Chinese people, not just wealthy people, but mass Chinese population, just reached the income level enough to afford locally built smartphones. And this is very different from developed countries, because in developed countries, mobile internet was more like an extension of a broadband internet. So it wasn't that revolutionary. For countries that were poorer than China, it hit only the wealthy people because the majority of the population couldn't afford not just iPhone, but China-made phones. So the adoption was gradual. But in China, because of the confluence of many factors, the smartphone adoption rate went from 15% in 2010 to 60% in 2012 in just 2 years. And because of that mass adoption of mobile technology and suddenly having a computer in everyone's pocket and being online every day, it's very unique. Like the entire society is like that. Like China, the offline payment didn't work. It was WeChat Pay that made offline payment work. There was no national retail in China. It was Taobao that made it possible. So when you have such billions of people and the society having grown up in mobile internet, of course, people's demand is much higher. In a sense, you can say China as a society is far ahead in experience curve, mobile internet experience curve than others. And because they are so advanced, it's much, their product and design and it's much easier to build a competitive product. I think that's the secret for mobile internet. And then for manufacturing, it has been well known that China is competitive in manufacturing, but why suddenly with, this cutting edge products like drones, solar panels, like batteries, EVs? If you think about it, I think it's on top of that supply chain and disciplined workforce, it is education. China does really good public education for their population, and it generates 12 million college graduates every year. And almost 40% of that 12 million comes out with degree in engineering, and the society has a culture of respecting and paying their engineers very well. I think all these is why we see Chinese companies being very competitive. However, again, as an equity investor, publicly listed equity investor, the question is not about whether they can export and grow revenue, but they can grow profit. And that becomes tricky because operating overseas is tricky. Simple export is easy, but companies do not like it. They want Chinese companies to come and create jobs. European companies have operated overseas for 100 years. It took decades for Koreans and Japanese to learn how to operate overseas. And, Chinese companies are just starting. So, yeah, that's...
so much to unpack here. Thank you, Eileen. So you heard that 12 million graduates and almost 5 million engineers every year. In this new economy, the most important raw material is well-trained brains, and nobody has more of that resource than China. Ron, let's change gears a bit and go to the healthcare space. In the US, it's like 20% of the GDP. In Brazil, it's more around 10%. You have an office in Boston. You focus on that area a bit. In Brazil, the main problem is that the cost to deliver healthcare keeps increasing way higher than inflation. So, what is the future of healthcare? What are you betting on? Should we expect to see more things coming out of?
Yeah, I mean, I think the low-end drug market, the Chinese dominate. China also produces a lot of, not just engineers, but also scientists, biology, chemistry majors. So the quality of drug development in China is world class. The biggest market for healthcare and for a lot of things is America. Only America would you have a drug that costs $1 million. They wouldn't allow that in China. So we're seeing really two things going on. One is IP being licensed out to America, finish the FDA approval in America and sell in America. All the big pharma companies doing that today, so a lot of our portfolios are in the process of doing that as well, licensing out. Two, we just did a deal in Boston actually. They want our help to do clinical trials in China. China is there's lower thresholds for IP to get to clinical trials, and some American companies are taking advantage of that. But I want to kind of circle back a little bit to another point, which is I love to see this happening. Is that because I feel like we're in the sort of the backyard of America. It's same time zone. Culturally, I think a lot of people go to school in America. Culturally is a fit. A lot of the entrepreneurs in China, they love to go to America because that is the biggest market in the world. Even though China is a very big market, U.S. is the biggest for innovation. I would love to see startups kind of take advantage of Chinese technology, take advantage of your local presence, your proximity to America, the integration, and really form global. A Chinese founder, a Brazilian founder, doing extremely well in America. That would be a dream deal. That would be and go NASDAQ. So I think that could happen in software and AI in some of these areas.
I see what you're looking for. I'll keep my eyes open. There is a company called Credigo that one founder is Brazilian, the other founder is Chinese. The software development team is in Hangzhou in China, and they work in the open banking. They're making good money, growing well. It's a good company, but they're not attacking the American market as far as I know. But anyhow, I hear you. Ning, do you want to share a little bit your views on healthcare for the group, and also this that we're commenting on it on education as well?
Just a few comments on that. I agree with Ron. I think it's licensing out. If you just look at the market size, 4 years ago it was pretty much about the $4 billion or $5 billion US dollar in total. But last year it's grown to 50 billion more. So in the 3 to 4 years is 10 times or 15 times the growth. And the sector itself is growing 30%. year on year at least. It's accumulation of the level of the standard of the research people with the experience accumulated in the past 2 or 3 decades achieving this level. Our country have a demographic changing. We are facing an aging population, so itself is a big market, not to mention the working with the other countries. New drug development is also in an area, so we've been deploying a lot of capitals as well. The pipelines actually also doubled. It's going to be 8,000 in a year or two. It's doubled in the past 3 years as well. Another area I think is very, very interesting is related to the topics that we mentioned before. It's the manufacturing and the technologies utilizing into the medical devices. We've been having the luck to invest into some of the leading companies with the returnees from U.S. to China, and found that those companies who can help the surgeons to increase the precision level and shorten the time of the surgery, really to help the patient, help the doctor, help insurance companies, and achieve the win-win situation.
Aileen, it's your 3rd time in Brazil, right? And you have been talking to a lot of very smart, sophisticated investors and financiers here. What do you think people should know about China that they do not, or any misconceptions? And also any closing remarks, because unfortunately we have to wrap it up.
That's a big question. I'm nervous. But let me put it this way. I think if this might be relevant only for the public market investors, but I call that China is entering great stabilization. And honestly, being a value investor in China for almost 20 years, historically, it was extremely difficult for me to find a company that I can see 10-year future. But now it's getting increasingly feasible and easier. Why? Because, think about it. In 2000, China's GDP per capita was only $1,000 per capita. Now it's $13,000 per capita. And that basically means I don't know how often Brazilians move into new home, but in China, the home that you bought when income level was $1,000 that you thought was adequate or even luxurious became inadequate and completely behind the time and not modern, like 10 years later. Consumer preferences changed, the regulatory standard changed, the manufacturing technology changed, almost everything changed. And I think that's part of the rational reason why historically Chinese business managers chased after growth. Growth at all costs instead of managing their company better. Like, what is the point of trying to have a sophisticated management of your company when you do not know how things will change in 5 years, 7 years, 10 years? However, think of today. China is already at 13,000 GDP per capita. Naturally, the income growth will slow. And slowing income growth means slower upgrade of consumer preferences. The regulation, whether it is drug-related regulation or corporate governance-related regulation, it's already at developed market level. So there will not be an abrupt regulation change. And, it goes on like technology. China used to copy others' technology, and that's easy. Now other people want China to transfer technology. China is innovating. Innovation is naturally slow. So all this basically means that, as a secondary public market investor, there are more companies that we can predict the future and feel more comfortable investing for the long term. And I think it's something that, institutional investors, if you are looking for China managers, it's probably you might even need a change of mindset of how this manager made money historically and how his style would fit in this new China that is no longer radically changing but changing incrementally.
Fantastic. Ron, we have time. It's good. So many topics. Crypto, retail, You have done so much in so many fronts, but if there is one company or one topic that you want the people to, when they think of you, or one lesson that you think is not so obvious that you want to share.
You know, we're in the business of creating great businesses. It's all talent. It's also following the trends in technology. Technology returns are very asymmetrical, especially in this AI revolution that's very underhyped. There's so much that will be done. I welcome you to visit China if you haven't. I would say maybe sort of parting remarks. Everybody's got a China story, and all those stories are true. All those stories are true, right?
The good, the bad, and the ugly.
They're all true. It's a big country. It's one China, as we say in China, but it's multiple Chinas. So everything's true. The question is, what is more true? That's something to discover. Ricardo, you've been in China many times. You kind of discover the truth. And second, there's a little bit of everything. You got to pick your battles. I mean, there are certain sectors we don't touch. There are certain people we don't work with. There are certain structures we're never going to come close to because they're not good, right? So it's no different than any other country. But for the brave and willing, it's a very interesting place to be. So welcome, you come visit.
Fantastic. Ning, your first time in Brazil, not last. Any closing remarks?
I'm surprised of the welcoming people here. It's my first time. I feel very warm. I feel we have a lot of opportunities to work together between two countries, between the companies we invested in and the companies here. China is also a very welcoming country. Back to the question Ricardo mentioned, you will be surprised about China. Pick up any of the cities of the top 10 biggest cities in China, you will be surprised at how many restaurants or how many type of food you will be enjoy. You will never, ended up with eating for your entire life because there's so many variety of the good stuffs going on. Please come and enjoy. You will be welcome.
I'm so glad you said that. So more than 1,000 people have gone to China with me. I organize these road shows. And a lot of them are very worried about the food before they go because just ignorance. And I tell my Chinese friends, they're like, what? They don't like Chinese food? Are they crazy? And then by the last day, they're like, oh my God, I'm depressed. I'm going to miss this food. Where do I find it? The Sichuan taste. Maybe this is a business to back the best. Anyhow. There is so much to learn and to unpack. There were so many topics I would like to discuss with these guys. This is really the best of the best. I want to thank Guilherme and XP to bring these guys. It's not their last time in Brazil, but it doesn't get better than this. So thank you for your time. I hope you learned something. And I will say em português. Eu escrevi livro que chama O Poder da China. Me manda uma mensagem em LinkedIn ou Instagram, eu mando para vocês. O objetivo é diminuir um pouco a ignorância. De novo, nosso maior parceiro comercial desde 2009. Se você está preocupado com o futuro, tem muita coisa que está vindo de lá e essa tendência é irreversível. Thank you guys. Xixi.
Show me the money.